Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring, and today is Saturday, March 12th, 2022. Hope you're having a good weekend. Hope you're having a great day. Appreciate you being here. And in today's podcast, what we're going to do is we're going to take a look at the trades that I had last week. We're going to talk about when I entered them, why I entered them, how I'm going to manage them, and how I did manage them going forward, either to the upside or to the downside. I trade on daily charts, weekly charts, monthly charts, so I have some trades on each one of those time frames. So we're going to go through, we're going to take a look how I did. Not great, I'll give you a hint, not great, but it has been a very difficult trading environment, especially for swing trades over the last 4 weeks, especially with what's going on with the Russia and the Ukraine situation. Everything's headline driven. So I hope you're doing okay out there. I know a lot of traders that really have been getting hurt in the last month with trading. It does go back to the most important things for me, which are number one, position sizing based upon volatility. Number two, having a good risk to reward ratio and having a clean line of support of, whether you're right above it or wrong below it. But we'll get into all of that kind of stuff. But I do hope you're staying safe. It's extremely volatile. This reminds me of like 2001, 2002, 2008. It's a very difficult time. So I would say if you are trading and you are taking losses, I know it probably feels like you're never going to make another penny the rest of your life. I've been through this many, many times. There's times where I feel like I'm never going to lose another penny. Well, that's not true, but it's also not true that you won't make another penny with trades. Follow your process, position size correctly, adhere to your stops and your levels and the support, and things will turn around eventually. I don't know when. This is a little unprecedented, what's going on. But anyway, all we can do, in my opinion, is follow our signals, position size correctly, get out when we're supposed to, be patient, wait for the next trade, and rinse and repeat. And it may happen again, but you gotta keep going when you have legitimate signals. All right, so we're going to talk about my positions, when I bought them, why I bought them, how I'm going to manage them going forward. We're going to talk about trader psychology. Trader psychology is so important in this particular current situation with the market. It is difficult to take losses week after week. It's mind-numbing, really. It sucks your soul out, and I understand that. But I've been through it before, and things will turn around eventually. So we'll talk about trader psychology, the importance of creating a plan and then following your plan regardless of the outcome. If you want to be a long-term profitable trader, this is what you have to do. I promise you, you have to do it. You might get lucky, take a jab or take a stab at a particular trade, but in this market, it's maybe good for a day, maybe good for 2 days. So get yourself a real trading plan. Get yourself someone to take a look at your profit and loss. I promise you it will help. Your husband, wife, brother, sister, girlfriend, boyfriend, whatever partner that you have. One little hack that I have is I share my profit and loss with several people during the day, every day, because it makes me trade better, because I don't want the shame of sending this horrible profit and loss, and it does have an effect on your trading. So just a little suggestion there. If you're finding it hard and difficult to follow your process, share your results with someone. It just somehow magically makes you trade better. So we'll talk about trader psychology. I have a good friend, Frank, that's a great poet. He writes poems about trading, particular to what's going on in our current situation. He has a great poem. I want to share that with you. After that, we're going to go down my watch list. We're going to go down through each stock one by one. We're going to take a look for potential trades for me for next week. We're going to look at particular levels, and I'll try to narrow it down. I'll go through each one. I'll narrow it down. I'll put a check mark by the ones that have some potential for next week. Of course, I don't know exactly how next week's going to play out, but it gives me something to look at and show you the process that I go through of narrowing down my watch list to take a look at the stocks that I want to look at and what I'm looking for next week. So I hope that's going to be helpful for you. Okay, so that's what we're going to do. Before we do that, I have to run the U.S. legal disclaimer first. So hang tight for about 40 seconds and I'll be right back. Thank you. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. All right, thanks for holding through that with me. Let's get started with Goldman Sachs. So Goldman Sachs, I did enter this back on, let's see, here on the 24th of February. I had an under 30, over 30. That was my signal. My end of day stop is a close below the 30 RSI. I also have my emergency stop down here. End of day stop, just with the name that it is, end of day stop means if it closes below a certain level, I'm going to go ahead and get out. Well, my entry signal was an under 30, over 30 RSI. That was the signal. So my end of day stop is going to be the opposite of that, or close below the 30 RSI. Now I also have my emergency stop. I do want to show you this. I always have two stops: end of day stop, emergency stop. I'm an end of day trader, so I get out of my trades at the end of the day. However, if the price action goes against me in a big significant way, sometimes you can't wait until the end of the day, right? If things are really going down strongly like they are in market, you have to have a level where you say, hey, it's not the end of the day, but this is the maximum allowed loss that I'm going to take on a particular trade. Emergency stops don't happen very often, only about 5% of the time, but they do happen, and this is one where it happened. So let me explain the initial trade to you. Under 30, over 30, that's my entry. How many shares do I buy? Good rule of thumb for position sizing based upon volatility is take whatever your account size is. Let's just hypothetically say it's $100,000. 1% of $100,000 is $1,000. Now, I do not use 1% of my capital as my emergency loss. I only used about 0.5%, okay? But I trade a large account. So in my situation, I use 0.5. But for this example here, let's just use 1%. Okay, let's just hypothetical $100,000 account. 1% is $1,000. What I do is I take $1,000. I divide it by the value of the 2 ATR. This measures the full range of each bar, adds it up, and then divides it by 20. It takes the average true range of any particular market over the last 20 days. So 1% is going to be half of this. I take 2%, 2 times ATR is 2 standard deviations, not 1 standard deviation. Anything within 1 standard deviation, or in other words, anything within 1 ATR is noise. It's expected to move that much. That's what that number is. That's what it's expected to move. So I want to put my emergency stop well outside of noise. That's why I use the 2 ATR. So $100,000, 1% of that, $1,000, $1,000 divided by, in this case, 2037, would tell me to buy 48.2 shares. So when I buy with the entry signal under 30, over 30, that's my entry signal. End of day stop is a close below the 30 RSI. Emergency stop is 2 ATRs below. And so if I bought here and it gets down to my emergency stop, how much did I lose? I lost $1,000, right? Because I did the math. I took $1,000 divided by the value of the 2 ATR, 20.73, tells me to buy 48. Well, 48 times 20.73 is $1,000. So percentage-wise, this was a big loss, right? 5.77%. But it wasn't 5.77% of my total capital. It was 1% of my total capital. And that's why it's so important to use, in my opinion, to use the 2 ATR to position size. Now, bad news that, and you can see, bought it here, went up, came down, held the 30 RSI, but I marked the level down here so that if it ever got there, well, what did I lose? I lost $1,000. That's as much as I am willing to lose on any one trade, so I had to get out. And then what did it do? It immediately bounced, right? But that's how it goes. Sometimes that's going to happen. Another thing I want to point out here is that I always take profits. I always take partial profits whenever I enter a trade, and in the future it goes up a certain amount from my entry point. I use the 0.45 ATR from the close, and I sell 10%. Right here you can see on my chart I have 0.45 ATR is 4.66. Right now 4.66 is 0.45 ATRs of a regular ATR. So the good news here is that when I bought it here at 339.90, the next day it started to go up nicely, and I believe I hit 3 profit targets on this. So that would be 30%. So I took 30% off of my trade at profitable levels, which only left me with 70% to hit my emergency loss. So did I lose $1,000 on this hypothetical, or not a hypothetical trade, it was a real trade, but in our hypothetical setup? No, I did not, because I made money on 30% of my trade, and then I lost the maximum amount on the rest of the trade. So anyway, disregarding the amounts that I took here, this was a loss of 5.77%, and I have not hit an emergency stop for a while, but in this market, more likely to hit emergency stop. So make sure when if you do come up with your maximum allowed loss, make sure it is a loss that you really can handle. And more importantly than that, if you have 2, 3, 4 positions and the market goes down all in one day, you're not taking emergency loss just on one position, you're taking emergency loss on several positions. So all in all, under 30, over 30, took some profits, came down last week when everything got really ugly, did have to get out for a loss of 5.77%. That's on Goldman Sachs on the daily charts. Tesla. I did buy Tesla back on the 9th of March with a close back over the 200-day moving average. We did not close too far above the 200, giving me a good risk to reward ratio. Legitimate signal. It does back test well on Tesla with the close under the 200 and over. I bought it here at 857.21. My end of day stop is a close below the 200, because the reason I got in it was a close under, close back over. So logically, if it closes back under, that's my end of day stop. I had my emergency stop down here, right? 2 ATRs below, did not get there. The very next day, it gapped down, went down. I wait till the end of the day, unless it hits my emergency stop, reverse back up. This was a pretty small loss. It did close below the 200-day moving average. So I bought at 857.21. I got out at 838 even for a 2.81% loss. Never fun to take a loss. It was a small loss. Was it 2.81% of my capital? No, right? If it would have gone to my emergency stop, I would have lost, well, for me, I would have lost a 0.5%, right? But the next day or Friday, it continued way down. Not thrilled that I took a loss, but it was a small loss. And more importantly than that, I'm glad that I got out because I avoided the big down move that happened. It's never fun to take your loss, but if you take your stop loss and the next day it goes down, it always makes you feel a little bit better. So I am out of Tesla. SPY, another losing trade. I did buy SPY here back on the 4th of March. Higher low bounce off the 300-day moving average. Bought here at 432.07. Have my emergency stop down here at 414.10. Next day, boom, just closed right below. Didn't really get too close to the emergency stop, but it clearly closed below the 300-day moving average. So I take a 2.9% loss on that. But remember, that's not 2.9% of my total capital. It's just a fraction of the 0.5% that I was risking on the trade. Okay, so those are the daily trades. I also trade weekly trades. I like to trade multiple time frames. I trade all day long day trading. I trade daily trades, weekly trades, monthly trades. Weekly trades, the bar ends on Friday. I'm going to take my signals on Friday. I'm going to wait till the next Friday to take any action unless my maximum allowed stop it has hit. I did buy IWM with an under 30, over 30. intra-week rejection of the negative third ATR channel and intra-week rejection of the 100-day moving average. That was my signal. I bought at 193.20. Next couple weeks moved up nicely. I took partial profits, as I mentioned earlier in the show. I always do the 0.45 ATR profits. So I did take some nice profits off the next week. Then we came down. Then we had that big down bar. You can see I have my emergency stop down here. Never quite got there. And my end of day stop is a close below, or end of week stop is a close below the 30 RSI. This one, fortunately, in the money, because I bought here right now. It's not up much. It's up 1.99%, but super grateful and happy that there's actually some that I had a profit in this crazy week. So this particular trade, IWM up 1.99%. Now, lastly, love Southwest Airlines. This is a monthly chart. I take my trades at the end of the month, make my decisions at the end of the month, unless I hit my emergency stop, that is. And let's see here. I did buy Southwest Airlines with this nice V2 trigger at 44.74, also a rejection of the 100 month moving average. Bought here at 44.74, did move up, did hit one profit target, so I took 10% off. Thankfully, we have come back down. My end of month stop is going to be a close below halfway of this washout bar. This is the washout bar. Here's bar 1, here's bar 2, here's bar 3. 2 washes out 1, 3 closes above 1. If the bar closes below halfway of this middle washout bar, I will get out. It's underneath right now. So you say, Greg, are you supposed to get out? I have to wait till the end of the month before I make that decision. Have my emergency stop down here. So this particular trade, not doing so hot tamale, down, what is that? 10.99%. So again, did I lose 10.99% of my capital? No, of course not. If I would get down here to my emergency stop, me personally, I would only lose 0.5% of my total capital, right? That's the beauty of using the position size here. So percentage wise, yes, this is down big, but actual percentage of my account, it's down small, and that's the key. So it's not the end of the month. I'll have to wait till the end of the month to make my decision. It's either if it closes back over halfway this washout bar here, then I'll stay in the trade. If it comes down, hits my emergency stop, I'll get out, and then I really will lose 0.5% of my total capital. Or if you were using 1%, you would lose 1%. So not a great showing. It's been very, very difficult with trading on these swing trades. But listen, keep positive. There will be a time when the market moves up. I wish I knew when it happened. But I don't, so I will just continue to position size for volatility, follow my rules, get out when I'm supposed to, take my profit targets to the upside if they happen. All right, so wanted to talk a little bit about trader psychology. This is from my good friend Stephen Goldstein. He's at Alpha Mind 101. Stephen is a retired trader. He's a world-class trading coach, has a great podcast where he interviews traders from all over the world, small traders, big traders, option traders, hedge fund managers. It's kind of like Market Wizards in a podcast format. And Steve was nice enough to have me on his podcast twice, interviewing me as a small retail trader. And so please follow him, Alpha Mind 101 on Twitter, or just type in Stephen Goldstein. He's a great guy. He has the great podcast. He will post links for his podcast and other great content. So do yourself a favor, follow Steve Goldstein. Let's see what Steve has to say. Despite the difficult challenge trading offers, the high attrition rate and low success rates, there are some who succeed. They've all suffered huge setbacks, torturous mental battles, periods of self-doubt, and never boasted of trades on Twitter. The journey is not meant to be easy. And you know, everyone, it's so true. There are so many people that lose money trading. In my opinion, they're not following a proper trading plan with good trading principles. Their ego gets in the way. They don't want to take losses. And in a market like this, it can just devastate your account. But there are people that do succeed. I've been trading for 25 years. So, seeing this, it's difficult. It's not fun, but I've been through it. I know the tide changes. But yes, even the people that succeed at trading have gone through these huge setbacks. They've had these mental battles. They've had periods of self-doubt. Never boasted of trades on Twitter. When I started trading, there was no Twitter, but the point is here, even the most successful traders in the world go through these. So if you're going through this right now, have some comfort in the best of the best traders in the world could be going through this as well. The journey is not easy, everyone. It's not easy. If it was easy, everyone could do it and no one would work and we would all trade. So you just have to be better than the majority of people out there. And what I mean by better is having a trading plan, following the trading plan, position sizing, knowing when your stop losses are, your emergency stop losses, your end of day stop losses, your targets, your overhead resistance levels, having a good trading plan in place. So if you're down on trading right now, take some comfort. Some of the best traders in the world are going through the same emotions that you. Eventually things will turn around. I just don't know when, but have faith, have patience, and follow your rules. But thank you, Stephen Goldstein. This was helpful for me. I hope it was helpful for everyone else. All right. Before we start looking at potential setups for next week, I mentioned at the beginning of the show that I did want to talk about Frank's poems. You can follow Frank at FrancoD on Twitter. He's a great trader, great poet, great musician, and he writes poems almost every day and posts them on Twitter. I really like this one. Let's read it. Stocks in a pot, all in a boil, as traders stir them amidst all the toil. Positions impacted by the smell of oil, get it? Setups protected so as not to spoil. The market can strike like a snake that coils. And, this reminds me of a telephone call I had with a new trader a couple of years ago where they were kind of talking and a little bit bragging about how much they've made. And I was like, listen, this market is kind of an artificial market to me. The market's just going up. It's really not that hard to make money. Don't get too confident in your innate trading skills because, a rising tide lifts all boats. Well, we are in a completely different market now. And like I said, I've been through this many, many times. Stock markets don't just go up. They're sideways motion, big moves down, and that's what we're dealing with now. It's super scary. There is no doubt. So please be humble. Know that the market can really hurt you. Follow your plan, but let's read it one more time. Stocks in a pot, all in a boil. Well, I'd say the stocks are in a boil right now. As traders stir them amidst all the toil. Positions impacted by the smell of oil. Of course, oil right now is moving so many things around with this conflict. It's having a huge effect on inflation, all sorts of stuff. Setups protected so as not to spoil. Setups protected so as not to spoil. What does that mean? Position sizing, knowing where your stops are. This market could go down a lot further. You don't want to get drugged down with it. The market can strike like a snake that coils. Sometimes it's easy. It's nice. It's like a nice sunny day at the beach where there's no surf. Other times it's like hurricane. And right now we're in hurricane mode. So thank you, Frank. Hope everyone will subscribe to Frank over on Twitter at FrancoD. All right, let me get a little sip of water here. And let's head through the charts. Let's see if there's some setups for next week. Again, I'm going to be going through each setup here. I'm not suggesting you take these trades whatsoever. This is just my process that I do on the weekends to mark some potentials for me to look at for next week. Remember, I need to look for levels, serious levels that hopefully where buyers will be coming in, like the 30 RSI level, the 300-day moving average, the 250-day moving average, the 200-day moving average. And those are the levels that I know large institutional investors will be coming in at. If you can find levels where lots of people are coming in, it will increase your chance of having a profitable trade. It doesn't mean you're going to have a profitable trade. And in addition to that, what I really like to look for are confluences of signals, combinations of signals, because an under 30, over 30 will bring in one certain group of buyers, and under 200, over 200 will bring in another group of buyers. I just said that the more buyers that you have, the better your chances of having a profitable trade. And so I like to look for confluences. And right now, where we're at down at these levels, there are some potentials for some nice confluences, or in other words, like an under 30 over 30. At the same time, there's an under 300 SMA over 300 SMA, or under 30 over 30, along with a under 250 over 250. Throw in a negative third ATR channel, that increases the chances. Throw in a V1, V2, that increases the chances. So I will be marking something for me for next week that I will be eyeing and looking for. Let's start with Apple on the daily. Well, starting off with one that I'm very, very interested in, and this is Apple. Look how close we are to the 200-day moving average. If you go back in time, Apple does not spend a lot of time around the 200-day moving average. It spends it way above. And as a matter of fact, let me do this right here. This is etfreplay.com. This is my back testing software, etfreplay.com. I use this by permission. I'm using this by permission from etfreplay.com. But let's take a look at the back tested. Oh, geez. Well, that kind of spoils that. I don't know what's down on the website here, but for some reason, Apple is not letting me backtest this. Ah, shoot. Sorry about that. I did not see that coming, but I can tell you, because I've done this many, many times, Apple backtests very, very well off the 200. And I can promise you, a lot of people are eyeing this 200-day moving average. Now, we have some options. We have the 200-day moving average. We have the 250-day moving average. We have the 300-day moving average. With a company like Apple, I will be looking for a close under, close back over the 200, an intraday rejection, or a bounce at the 200. If it happens, I will certainly buy it. If it fails and closes below, I will look below. If it rejects the 250-day moving average, or if it closes below the 250, I'll be looking at the 300. That's about my last line of defense there on Apple. Whether, it could certainly go below the 300-day moving average, I don't know. But, if it closed below the 200 but not reject the 250, okay, well, there's nothing I can do unless it comes back down, then rejects the 250. That would be one option. Or if it closes below the 200 and then back over, that's my signal. So I'm definitely marking Apple. This is it's rare that you get to buy a company like Apple at the 200-day moving average or the 250 or the 300. So if it does reject it, this is going to be one of my favorite trades for next week. So watch Apple, see if it rejects the 200, the 250, or the 300. But remember, you have to have your maximum allowed loss, which should be a very, very small part of your total capital. 1% is a good rule, right? Have your emergency, have your end of day stop, have your emergency stop. For me, it's going to be 10 points. At this point today, it's going to change every day, but right now it's 10.08. It might be up a little bit down further in the week. Or it might just run from here and we'd have to wait for a different signal to the upside. I don't know, but I really do like Apple, looking for a rejection of the 200, the 250, or the 300. Adobe, I don't really see anything here. It's a 3265 RSI. I like Apple a lot better because it's still over the 200. You see how far we are below the 200 here. So Apple showing a lot of relative strength in a very, very strong company. So nothing on DBE, nothing on Adobe. This is silver, AGQ, double leveraged. I would be interested in buying silver if it bounced to the 200-day moving average. That seems like it's quite a long ways away, so I won't mark anything there. AMD, well, this is interesting. Right now, AMD is at 104.29. Let's see, what was the low? 104.08. So this was a legitimate entry on Friday. It did go below the 300 and above the 300. I did not buy it here. I wanted to see more of a thorough rejection of the 300-day moving average, but I will mark this one. AMD, let's see if we can, let's go back over here. Please work. Yeah. All right, so you can see, oh, that's the 200-day moving average. Let's switch that to the 300. So quantitatively, looking at AMD, how does it backtest well over the over the 300-day moving average. It backtests really, really well. 1,629.6% return. Buy and hold during the same period was 319.3. The drawdown on buy and hold from that point was 96.6. The drawdown on using the under 300 over 300, or in other words, if it's above the 300, keep it. If it's below the 300, go to cash, only 68.2%. And so, AMD does not get down at these levels very often, and here it is. So next week, if AMD can go underneath the 300 just a little bit more, give me a little bit more of a washout, close back above, I would be interested in buying it. I'd also be interested in buying it if it could close back over the 250, and potentially interested to buy it if it closed back over the 200. So AMD is definitely one on my list. Amazon, not really near any potential crossover or major moving average. Amazon was up big on the news that they were going to have a split, a $10 billion buyback, but I don't see anything likely on Amazon next week. ARC Innovation, well, we're at a 3360 RSI. Moving averages way above. I really prefer positions that are above the 300 or the confluence of the 300 and the 30 RSI. So I am going to skip ARC because it's been such an underperformer. Boeing 3524. It did bounce last time here where it went under 30, over 30, and then bounced. So I will mark Boeing for a potential entry with an under 30, over 30 if that happens. Alibaba, oh boy, really down. 2459 RSI. It's so far down on the RSI. I'm not saying that it can't bounce, but if it does bounce to the 30 RSI, it will have already made such a large move to get there. I'm going to pass on Alibaba. Bitcoin here, this is BITO, the ETF. This one doesn't have moving averages, but we'll look at regular Bitcoin in a minute. Berkshire Hathaway, don't really see anything here that looks likely for next week. Here's a regular chart of Bitcoin. Don't really see anything here on Bitcoin that even looks potentially close for a setup for next week. BUD, Budweiser, 3998 RSI, below the major moving averages, not of interest. Beyond Meat, potentially. It's a 2963 RSI. It's at the negative third ATR channel. 92% of prices do hold or stop going down at the negative third ATR channel. Not all of them, right? Here we got down and we went lower, but I do like the confluence of being at the negative third ATR channel and the 2963 RSI. So if we had a slight little move back up, clearly it closed under 30 RSI at 2963. If it bounced back up, maybe closed at a 32, 33, 34, maybe even a 35 RSI level, that would be interesting to me. So I will mark that. Caterpillar, oh boy, it hurts every time I look at this chart. I bought Caterpillar back here on the 28th with a double under 30, over 30, 2 days in a row. It tested it, but the next day it closed below 30 RSI. So I had to get out. And then look at the run up that's happened. So I was 1 day off of this huge move, but that's sometimes how it works. I don't really see anything very interesting on Caterpillar. Cameco, if we pulled back to the 200-day moving average, I would like that. That would be a place of interest for me. We are so far above that. I don't see that likely for next week, so I will not mark it. CCL, Carnival Cruise Line, we're back above the negative third ATR channel. We're not very close to the 30 RSI, so I'll pass on that. DoorDash, 4095 RSI, that's DASH, not very close to the 30 RSI or major moving averages, so I'll skip. Dow Jones, okay, well, Dow Jones, if it closed above the 300-day moving average, might be interesting. If it closed under or rejected the 30 RSI to the downside, might be interesting. It's not very close, so I'm not even going to mark that. DocuSign, well, earnings went down 20.1% on DocuSign. 2506 RSI. If it closed above the 30 RSI, would I buy it? Probably not. It's too far below. A move back to 30 RSI would be chasey to me after the big move down here. I'm going to pass on DocuSign, probably take it off my watch list. Etsy, whew, boy, big move down here, big move up after earnings, and then big move down 11.5%. My gosh, double digit losses have just been the norm lately on some of these growth stocks. It's 37.21 RSI. I'm going to skip this one. Facebook. Okay, look, Facebook's at 30.34. We have a double bottom bullish divergence here. I will mark Facebook next week. If we can go under 30, over 30, that would be interesting to me. So especially in lieu of this double bottom and bullish divergence that's happening. So I will mark Facebook, FCX, very strong. Well, it's copper and gold. That's why not near the moving averages, not near the 30 RSI. So I will skip. Fiverr, same. I'm going to skip Fiverr. Gold, of course, we've had this huge run on gold over this conflict. Great signal here with an under 200, over 200 would have really paid off. That's why I like to key off the 200-day moving average. Not very close to the 200-day moving average, so I will skip. GNRC, not near the moving averages, not a low enough RSI, so I'll skip. Google, yes, Google, definitely I will be marking Google. Likely one of these two situations is going to happen next week for me. So, and I would like to be able to buy Google with a good risk to reward ratio on a deep dip buy. So here's the 300-day moving average. That would be my favorite. You can see last time it bounced there like almost to the penny. Here it got close, bounced. The 250 is also a potential if it closed above the 250, but you can see we closed here below the 250, above the 250, below the 250, above the 250, below the 250. So it is lost respect for the 250-day moving average. It's holding respect as for the 200-day moving average here above is resistance. I mean, look, perfect. Touch it, go down, touch it, go down, touch it, go down, touch it, go down. My ideal location to buy Google would be here at the 300-day moving average, or potentially like a V2, V1 back above the 250 would also be interesting to me. I probably wouldn't touch it up here at the 200, but my ideal would be some kind of intraday rejection or close under the 300, over the 300. Goldman Sachs. That's the one that I hit the emergency stop on. Nothing on Goldman Sachs for me now. Home Depot, we're at 34.93. It's possible that Home Depot could come down here, test the 30 RSI because we're not that far away from it. So yeah, potentially Home Depot next week if I have an under 30, over 30, and I'll mark it. IBB. Don't really see anything on IBB, not close enough. INDA. Not near the moving averages, not near the 30 RSI. Intel, same, not near the moving averages, not near the 30 RSI. Russell 2000, I have this. Thankfully, it's up on the weekly chart with this rejection of the negative third ATR channel, 100 and under 30, over 30. So nice confluence of signals. That's why I bought it, and thankfully it's up. But on the daily, don't see anything there. Johnson & Johnson has been strong, relatively strong. Pullback to the 200-day moving average that's inside this value zone would be a potential entry for me, so I will mark that. JO, which is coffee, commodity, down. Don't really see anything that interests me there. CarMax, 37.15. Don't really see anything that interests me there. Coca-Cola, my gosh. Well, of course, with this Ukrainian and Russian situation and Coca-Cola pulling out of Russia has definitely hurt the stock a lot. I would be interested in buying Coca-Cola if we got an intraday rejection of the 200 or the 250, especially after this major pullback. I don't think Coca-Cola is going out of business. So to the downside for next week, yeah, I'll be eyeing Coca-Cola with a rejection of the 200, rejection of the 250 or the rejection of the 300. Ideally, I'd like to have the confluence of an under 30, over 30 RSI. That's this in the bottom right-hand corner, and rejection of the 200-day moving average. So yeah, I'll be keying off the 200, the 250, or the 300. Lockheed Martin, of course, is a defense contractor, moved up very, very strong. This is a great place for me to point out that just in general in trading, sideways motion leads to trends. And this is a great example. Very, very sideways. There were a lot of accumulation of stock here. Then we had a breakout, and boy, did it break out. Now it is pulling back a little bit. Is it likely to get to the 200-day or the 300-day? I don't think so, so I won't mark it. Southwest Airlines do have this trade already on the weekly. Don't see anything on the daily. Lyft. Oh, my little dog is begging for attention. Honey, I'm doing a podcast. Here, lie down, hon. Lie down, babe. Good girl. That's my little dog, Piper. Love this dog so, so much. My little trading buddy. Lyft, I don't see anything here, but again, we are moving sideways. I would expect a move, some kind of trend from Lyft, whether it's to the downside or the upside, I don't know. When it's going to happen, I don't know. But what I do know is that sideways motion eventually will lead to a trend. Hopefully any of you that own Lyft, this is consolidation before a move up, but I don't know. MasterCard, boy, like the mighty have fallen, huh? I don't really see anything on MasterCard for next week. McDonald's, oh boy, we know what this one's going to be. This did, again, with the Russian situation, this huge sell-off, my gosh, what it went from 261 down to 216 within a matter of 2 months. This one's a little tough. We've bounced a little bit here. To be expected. We're over the negative third ATR channel. It's a 29.66. Potentially, yes, an under 30, over 30. If it moves up on Monday, it will go over 30. But after this big, huge bar down here, this seems more like a dead cat bounce, and we're still under all the moving averages. I think I'm going to pass on McDonald's for next week. Merck. Very relatively strong. My friend Mike, or AKA Leva, has this nice trade. He bought this over the 200-day moving average, and it is moved up. It was up much more on Friday, reversed a little bit, but still green, which is a lot, saying a lot in a market like this. A potential back here at the 200-day or the 250-day or the 300 might be a potential, but I think I'm going to skip Merck. Morgan Stanley. Morgan Stanley, big financial company. It's a 3406 RSI. Yes, it could go under 30 and back over 30. And it could do that with a rejection of the negative third ATR channel as well. So I will mark that one. Microsoft, yes, very interested in Microsoft next week. It's approaching the 300-day moving average. It would be a higher low bounce at the 300. It's, you go back in history, there's a lot of times where you can buy Microsoft at the 300-day moving average. I just put the 300-day moving average on here because historically we don't get there very much. So yes, I love Microsoft. I love the company. Last time it tested the 300 and bounced. Here it closed down, and then we had the big bounce. But yes, if I could get a intraday rejection or a close under the 300 or over the 300, I would definitely buy Microsoft next week. Netflix, double bottom bullish divergence is here. Huge day down, 4.61%. I don't think I'm going to get involved in Netflix. I'd rather concentrate on stocks like Microsoft and Apple, honestly. Nike. Well, listen, Nike's a big company, successful company, 3109 RSI. So yes, an under 30, over 30 would be a legitimate entry on Microsoft. I like that would happen at a higher low than this previous low. We do have earnings over here. Looks like on my chart, I don't know if this is right, but I'll just take its word, double check for yourself, but I don't hold through earnings. I never do. So if it has an under 30, over 30, yes, I would potentially buy this, but I would not hold it through the earnings. We are very close to the 30 RSI, so I will mark Nike. Nvidia. Well, Nvidia getting very close to the 250-day moving average. Let's see if we can backtest Nvidia off the 250, and let's see what the results are. So that's NVDA. We'll put in here the 250-day moving average, and let's see what the back. Again, sorry everybody, I don't know if it's because of the weekend why this is doing this, but I know it does backtest well. I just wanted to show you the results, but for some reason that website's having a little bit of an issue. And I'm having an issue because I misplaced something that I need. Hold on there, Pipey. Let me up, honey. Come on, watch out. Okay, I found it. Okay, love you, honey. Yeah. All right, so yeah, Nvidia, higher low bounce off the 250. You can see last time it respected it here, closed under, closed back over. But yeah, on a big company like Nvidia with a good risk to reward ratio, I will mark Nvidia. Now remember, I might be marking 10, 12, 15 stocks here. It doesn't mean if they trigger, I'm going to buy all of them. I only buy one position per day. I don't care how many trigger. I just like to buy the best one of the day with the best risk to reward ratio. So keep that in mind. If these all trigger, doesn't mean I bought them all. I'm going to buy the best one of the day. Just a watch list to look out for next week. But yeah, if we could reject the 250-day moving average, I would be very, very interested. Or if we go lower at the 300, I would also be interested there. PFE, nice. See, the buyers came in here at the 200-day moving average, and now it's trended up here. Way to go, Pfizer. For those of you who have Pfizer, I don't think this is likely that it will pull back, so I'll skip. PKI, potentially PKI here at the 300, but I don't know this one off the top of my head. So let's look at PKI, and hopefully PKI. And that one doesn't even backtest for that. All right, my apologies. So we'll move on. PLTR, don't see anything likely here. Philip Morris. Well, you can see I have lines drawn here on Philip Morris. I was really hoping that we could get some kind of close under the 300, over the 300, but we are so far below the 200, the 250, the 300. Not going to get involved here with Philip Morris. None of these major levels held, and I don't think that's a great sign. PayPal. PayPal potential. PayPal just got decimated with earnings, just moved down, moved down. Now at least we have some sideways motion. It is a double bottom with the bullish divergence, meaning this, the lows here had deep red bars, MACD bars. We've rallied, we've come back down. We're almost close to a double bottom, not quite, but even if we do get to a double bottom, we will have a double bottom in a bullish divergence. What I would be looking for on PayPal would be an under 30 over 30. It's 3101, very close to the 30 RSI. So even if we go down on Monday and close back over the 30, that would be a legitimate signal in my book. So I will mark PayPal. Qs. 3738 Qs, NASDAQ 100. It's lost the 200. It's lost the 250. It's lost the 300. Yeah, I'll mark this. This is a major index, and under 30, over 30 would be near the negative third ATR channel. So down in this range, about 312 is where I would certainly be interested. Rio Tinto. Really don't see anything there. Shopify, another one that's really got decimated. I will mark Shopify. It's at a 3216 RSI. If we went under 30, over 30, it would coincide with the negative third ATR channel. Remember, 92% of prices bounce there. So I will mark Shopify with an under 30, over 30, and intraday rejection, some kind of rejection of the negative third ATR channel. SIVB, don't see anything there. Silver. Again, nice rally off of the 200-day moving average. I would wait for at least some kind of rejection of the 200, but doesn't look likely. Snapchat, I do not see anything there. Virgin Galactic, don't really see anything there either. The S&P 500, well, I would be concerned about buying the S&P 500 here back over the 300-day moving average because it'd be such a great big move. And under 30, over 30 would get me interested, especially if it coincided with the double bottom here, but it doesn't look likely, so I'm not going to mark it. Teladoc, not going to mark. Teradyne, no. Bonds, TLT, don't see anything here. Tesla. Well, I did take Tesla, did have a loss on Tesla. Yeah, I would buy Tesla with the close back over the 300-day moving average, certainly. Let's try one more time on ETF replay with the 300. Let's see how this back test. Oh, yay. Okay. Does it back test well over the 300? It does. It back tests 2,962.1%. Not anything close to buy and hold. Drawdown looks like about the same, but is there an edge buying off of the 300? Yeah, clearly there is. I mean, this goes back to 2000. So yes, I will mark Tesla if we can close back over the 300 sometime next week. So we'll mark that. Twitter, not close to anything, so no. Unity Healthcare, Unity Software, no. United Airlines, no. Natural gas, don't see anything likely for next week. Doesn't mean it can't happen. UNH, don't see anything there. Oil, of course, we had the huge run up, the big pullback. Don't see anything likely on oil. UUP, which is the dollar. Of course, the dollar's been going up very, very strong on this conflict. I don't see a legitimate signal close there. Verizon doesn't backtest well off the 200. I know that, so I'm going to skip that. Walgreens, no. Walmart, it did close above the 200-day moving average, too high here up at the second ATR channel, so no. Energy, don't see anything there. XLF, well, it could get back over the 300 next week. Let's go ahead and backtest XLF off of the 300 and not guess, but actually know for sure whether or not there's some kind of edge in that setup. 300-day, run the backtest. Yes, it does backtest positively, 121.7 compared to 182.91. Drawdown's only 32.3 compared to 82. So yeah, I'll mark XLF with a potential close back over the 300. Real estate, boy, it sure has rejected the 200-day moving average. That's the black line. Bounced, came down, bounced, came down. Does it backtest well off the 300? It's pretty far away, so I think I'll skip. XLU, boy, look at that, nice. I almost bought this here, I remember, with this intraday rejection of the 200. I wish I had, because it really has moved up, but I don't see anything likely. XLV, don't see anything likely there. Exxon, no, and Zoom, no. So let's see what my marked watch list is. So we'll look at the flag symbols. Apple has got to be my favorite for next week. If we have some kind of rejection of the 200-day moving average, I will certainly be buying Apple. Advanced micro devices, if I could get the futures are down right now over the weekend from Weekend Wall Street, but a rejection, another intraday rejection or a close back over the 300, yes, next week I would be definitely interested in AMD. Boeing, potentially, if we can go under 30, over 30 right now, we're at 35.24. Beyond Meat, potentially, if it closes over the 30 RSI, doesn't move too high, maybe stops at like a 32, 33, 34, maybe even a 35. I don't really like to buy over 30 RSIs too much higher than that. Facebook, yeah, if I could get a nice intraday rejection of the 30 RSI, especially when we have this double bottom here with this bullish divergence. That's the combination. That's the confluence of signals. So potentially, yes, an intraday rejection of the 30 RSI on Facebook, I would be interested. Google, I really like if we could get down to the 300-day moving average. That's the orange line next week. Home Depot, yeah, 34.94. I mean, we've had a lot of the selling. We are kind of bounced and moved sideways. We had a V1 on Thursday. Not saying this is going to go under 30, over 30, but if it does, I would be interested. Johnson & Johnson, yeah, nice pullback to the 200. Might be interesting for me. Coca-Cola, yeah, if we continue lower on Coke, I would definitely be interested in buying Coca-Cola next week with a rejection of the 200 or the 250 or the 300 if we really crash. Morgan Stanley, an under 30, over 30 would be a possibility. Microsoft, love it. off of this 300, but we need to intraday reject it or close under, close back over. On a company like Microsoft, to buy at the 300 makes a lot of sense to me. Nike, big company, Nike's 3109. Yeah, if we could go under 30, over 30, I'd be interested. But remember, it looks like earnings are coming up on the 21st. I would not hold through those. Nvidia, yes, a bounce at the 300 sometime next week would make sense. PayPal, an under 30, over 30 in context of the double bottom with the bullish divergence. The Qs, I'm saying it's unlikely, but with this market, anything's possible. But yes, if I could get a confluence of an under 30, over 30 with the rejection of the negative third ATR channel, I would be potentially interested in the Qs. Shopify, an under 30, over 30. Tesla, a close back over the 300-day moving average. And XLF with a close back over the 300-day moving average. So not a big watch list for next week, only 18, but they're big companies, they're good levels. So that's what I'll be looking for. So, in this podcast, I know I go through this pretty quickly. Buy at the 300 or a V1. You might be saying, what are those? What are RSI? What's all this kind of stuff? So I do have a playlist in my YouTube channel where I do have free lessons for sure that talk about a lot of these indicators. And so, the purpose of this podcast is not to teach all the specifics of the entries, just go over them at a high level. But if you want to learn more about the specific entries and exits that I use or some of these indicators that I use, I do have free videos in my playlist on YouTube. Alternatively, I do teach private one-on-one lessons in the evening time via Skype. I love to teach. I've taught people from all over the world for many years. I teach all 5 of the different trade setups that I use. It's a 15-hour course. It's an intensive course. I mean, it's 15 hours, 5 sessions. Each session is 3 hours long. I teach you step by step each one of the 5 approaches that I use and then show you how to put them all together. We do a lot of simulation trades. I teach, we review, I ask a lot of questions to make sure that you're understanding what I'm teaching you. And then we do simulation trades where I let you drive, and you're driving, you're placing the trades, you're telling me where I'm entering, how much I'm entering, where I'm getting out, partial profits, overhead resistance levels, where's your emergency stop, where's your end of day stop, how is your trailing stop working. But essentially, and when you cut it all down, I teach you a complete trading plan. A lot of what we're talking about right now are deep dip buys, because that's what the market structure is. We're deep down, therefore deep dip buys. But I trade 4 other approaches too, as far as like return to value, V1s, V2s, higher low V1s, V2s, crossovers, double bottoms, bullish divergences, because the market's not always in this phase. It's in this phase now, but it will be in different phases in the future, and we have to use different approaches. So that's why I teach you everything I know. It's very important to me that my students succeed. Extremely important to me. It really, really is. The cost is $1,750, but I promise you it is worth every penny, because you are going to learn a skill. It's going to make you a better trader. So if you're interested in doing this with me, with the one-on-one, all you have to do to start the process is send me an email and say, Greg, I'm potentially interested in your one-on-one course. I'll reply, say, great, thanks, appreciate you being here, and let's set up a Skype call. Skype call is free. It's not a sales call. I promise you, I'm not a sales guy. I'm not trying to talk anyone in. I just want them to be a student of mine if they really feel like they want to learn a skill. And if you do, I will teach it to you. All right. So it's not a sales call. It's just a time for me to get to know you better, learn more about you, your trading, your challenges, your goals. And it's a good time for you to ask me any specific questions about the course. And when we're done with the call, you think about it as long as you want. And one day, if the mood strikes you and you're like, today's the day, email me back, say, Greg, I want to get going. We'll schedule it. Away we will go. And I promise you will help improve your trading. Secondly, if you like online courses, I have a great video online at udemy.com. The link is in the description of this video. It's called the Deep Dip Buy Stock Trading Course. And there couldn't be a more appropriate time to watch that course. It's a great course. It's only $12 or $15 on Udemy. but don't let the low price fool you, because it is packed full of content. I think it took me 4 months to create that course. And so it's a pretty good deal for 12 or 15 bucks, but I teach you exactly step by step how to trade it. There's 9.5 hours of video total. There's 26 videos. There's 15 study guides. I've got so many good reviews from around the world, feedback. It's a great course. So, if you have the 12 or 15 bucks to spend, you want to learn the correct way to trade the deep dip buy, watch the course, the links in the video. And then lastly, if you like this podcast, if it was helpful for you in any way, I would really appreciate it if you could hit the thumbs up button. It helps YouTube know that there's some valuable content here. And I would, if it was helpful at all, just take a second or two, hit the thumbs up button. I would really appreciate it. Talk to your friends about the podcast. If you could share it, that would be great as well. And I do want to let you off. I always like to say this, but I think it's important. I think the world would be a better place if we could all go out and try to do one nice thing for another human being each day. And on top of that, if you could go out and do a nice thing for an animal, that would be twice as good. I was raised with a lot of animals. I love animals. They have feelings, and I know they appreciate acts of kindness. So try to make it a goal. Try to do one nice thing for another human being each day. Try to do one nice thing for an animal each day, and I really think it will come back to you. So thank you so much for spending the time. I hope you have a good rest of your weekend. Be good. Be good, be safe, drive safe. And, for next week, we could have more volatility. Please, please, please identify your levels, position size based upon the volatility, follow your rules. And it doesn't mean you're going to make money, but, the point right now is conserving capital in markets like this. I mean, there's a chance you can make money. We certainly could have a major rally. We just don't know. You have no control of that. The only control you have over is how many shares am I buying? Where's my emergency stop? Where are my levels in my end of day stop to get out of? So I just want to remind you that. But please be careful in this volatile, crazy market. But again, thank you for coming. On the way out here, I have to run the U.S. legal disclaimer, and I think that's about it. But yeah, if you could, my hands are in the prayer position. If you could hit the thumbs up button, I really would appreciate that. And if you have any questions, feel free to email me or leave a comment below. Okay, thanks again, everyone. Take care. And on the way out, I have to run the U.S. legal disclaimer. Thank you. Bye-bye. U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.